everyone, welcome back to our channel Investor Forex. So today's lesson is about the mistakes that traders do while live trading and what are the ways that you could prevent those mistakes before they become a habit. There are many traders who lose even if they decide to follow a strict risk management rules and avoid over trading. So we're going to show you two situations to help you better understand and show that what you should actually do. So let's start with gold chart at 15 minutes time frame. Let's draw a trend line first, like how we showed you in the previous lesson. If you're new here and you haven't watched our previous lesson on trend lines, you can find the link in the description below. Whenever we are drawing trend lines, there actually shouldn't be any kind of biases. We actually only need to wait for the breakout and then decide when to place a trade. There shouldn't be any kind of expectation that could hold you back from finding any opportunity. Now we have drawn our trend lines along our support and resistance, and let's play and see. We'll look in the first situation where traders are monitoring the market and the market appears to be bullish. Now, the traders might think that today is the day to place only buy trades. They decide immediately, and keeping such expectation that makes them less patient. And in case of live trading, you actually need to have lots of patience. In this first situation, traders would even start expecting to find a support from which they would make gains scalping. So the market appears to go up, and the traders even start to draw trend lines according to different zones, different movements, thinking that, oh yes, the market is actually moving according to their expectations. The trader becomes more confident that it will be bullish for sure. It's on a continuous uptrend. Here you can see that we have two supports along this trend lines. It will break out and make its way up. Now that's what the traders might think. It tries to break out. Now here the trader will think market will move from here to that point, break out, retest, and then go up. So they decide to place a buy trade and wait. Here you can see there's a breakout. So the traders will think it will go up in that certain area. So they place a buy trade again. Traders expect it will bounce back from there and they will be in profit from both of its buy trades. Traders think that as soon as there is a pullback, they will make a profit. But then it moves in a different direction. Traders decide to place another buy trade here, still clinging to their expectations that market will make its way up again. Let's play out. Now they see that it has gone up. So when market reaches at this point, the trader decides to close the previous trade out of panic. Market goes down again. Trader decides to place another buy trade, still in an expectation that the market will go up from there. Same situation again. Places buy trade at this area in an expectation that it will go up again. Out of desperation, traders even start to look for support. So they draw a trend line here, convince themselves that market will reverse from there. Market goes further down again, and they decide to place another buy trade there. Again, in an expectation that it will go up again. This time, gripped in panic, the traders end up placing a hedge sell there. The market takes a reversal. Now at this point, fully gripped in panic, the traders will close their hedge sell. To the trader's disappointment, the market actually bounces back and makes its way down. Now, whatever trades that were placed so far from within this whole period The traders decides to close all the trades in loss. That's how it looks when you do live trading with high expectations, preoccupying your mind before you could even try to find an opportunity can lead to such losses. The traders kept on looking for support, kept on placing buy trades, kept on expecting reversal, but it didn't happen. And end of the day, they lost all their trades. So now you would ask, what do we do? How do we avoid this? Well, first of all, when we draw a pattern, we should be free of any biases. Do not start with a decision to place either only buy or sell. Just don't bother whichever direction the market is likely to go. We just need to wait for the breakout and nothing else. I'll play it a little faster. Our second situation it is. We will wait for the breakout, nothing else. Now we can see a formation of support there, so we draw a, another trend line. There's a breakout, but we won't buy right away. You can see the reversal, so now we are actually going short instead. Never try to catch a falling knife. There's a reversal, so we go short again. Here we'll go short at this area. Here we go short again. Once we are satisfied with the profits that we made during this trading period, we will close all trades in profits. If we compare these two situations, instead of waiting for the market to go up and then place a buy trade and again waiting for it to go up and again place a buy trade, It will be far better if we go short in this situation, like go along with the market. It would be less risky as well as more profitable. Now let's draw our support. Let's play out. The further it goes down, the better it is. We have made enough profits from this. So this is the only way by which we can make profitable trades every day. Wait for a breakout, sell if the market is going down, buy if the market is going up, and never wait for pullback unless you're going for an overshot like you have seen in this second situation. Let your mind be free of any biases. Be neutral and make your analysis. So that's all for today in this lesson. Don't forget to subscribe to our channel so that you don't miss any lesson. See you next time.